you, Bono-Voznenko for Modern Wall Street, and I'm here with none other than Stephen Guilfoyle. Stephen, thank you for joining us today at the New York Stock Exchange.
Once again, it's Thursday, and the pleasure is all mine.
Well, thank you. I'm sure you've heard we are in a serious heat wave, so tell us, Stephen, what stocks are hot today?
What stocks are hot today? I tell you, we've had some good news from some of the Marriott's, Hilton's, the lodging stocks are actually having a decent day. But it's actually, we hit a level today, a high level overall for the S&P 500 of 2108. And then we hit a little trouble, all right? The British pound came off. We got the oil inventory print, which was, although it was a decrease of 2.2 million barrels, it was far less than the 6.7 million barrels that the API told us last night that we were probably going to see. So it was actually taken as a negative for crude, which knocked that ball down about 3% and took a lot of stocks with it.
Stephen, are we seeing typical summer trade this week?
Obviously not. I mean, we're being driven by compression of bond yields. We're being driven by commodities. We're being driven by the currencies most of all. We are kind of like the dog being wagged by the tail at this point. Although equities are what people speak about the most, it's really everything else that's impacting stocks at this point.
I'm glad you bring up bonds. Can you explain to us what the bond bubble is?
We're not even sure if it is a bubble, all right? Obviously, we've seen negative yields in so many sovereign bonds around the world, and our own bonds here are actually trading at very low yields. But the bond market is under such pressure that I don't know, given the perverse nature of monetary policy around the globe and the search for yield that we're seeing in so many different places, if it's actually not normal for these times. Obviously, the fundamentals have been skewed. So given skewed fundamentals, is this a bubble? In the grand scheme of things down the road, it probably is. But given in the context of the times, they're probably trading where they should be.
All right, and we also have some jobs figures today. Is that pointing to a positive outlook for tomorrow's big number?
It didn't in May. Now, yeah, it should, in theory. In theory, we should see a decent number tomorrow, along with hopefully a nice revision to May and even April, and get things back on track. Now, some people might ask, would that get the Fed back on track towards the next rate hike? The Fed funds futures are not pricing in another rate hike till something like early 2019. So odds are no. But if we do get, say, a 200,000 print for non-farm payrolls tomorrow, another 100,000 or so in combined revisions, and let's say a hot CPI number next Friday, well, then yeah, we would all have to change course a little bit and say that maybe John Williams of San Francisco, although he sounded a little foolish the last couple days, maybe he isn't crazy if that's the case, but that would need a few things to fall into place.
There is a lot of uncertainty. Stephen, finishing up, can you tell us, is there anything to be certain about?
Yeah, the Fed will continue to move markets. Next week, there are 13 Fed speeches that I'm tracking with at least 2 on each and every day. There's also the Beige Book. So yes, you will have to keep your eye on everything that's said next week, and then the retail sales number on next Friday as well. So.
All right. Well, we have a lot to look out for. Thank you so much, Stephen. Stay out of the sun and have a nice weekend.
You have a nice weekend.